Did you know that as a small business owner, you can distribute tax-free dividends to yourself using a Capital Dividend Account or CDA? Understanding the potential of a CDA can significantly reduce your tax burden, keeping more money in your pocket. In this video, we'll demystify CDAs, explaining what they are, how they work, and how you can leverage them to maximize your tax benefits. Whether you're new to the concept or looking to optimize your financial planning, this video will provide you with the essential insights you need to keep more of your hard-earned money in your pocket. All that and nothing else coming right up. First up, let's dive into what a Capital Dividend Account is. A CDA is a nifty tool that Canadian private corporations can use to distribute tax-free dividends to their shareholders. Essentially, it allows you to pay out the non-taxable portion of your capital gains as dividends without having to worry about the tax man knocking at your door. Now, how does the Capital Dividend Account work? The best way to learn is by looking at an example. So here's a step-by-step breakdown using a scenario where you sold an investment for $100,000. First things first, you'll want to figure out how much you can actually pay out as a capital dividend. Number one, you want to review past gains and losses. Suppose your corporation had a capital loss of $20,000 in a previous fiscal year and no other capital gains or losses in any other year. Number two, current year's capital gain. Now you sold an investment for $100,000 with a cost base of $60,000. That gives you a capital gain of $40,000. You need to net this gain out against your previous loss. $40,000 gain, $20,000 loss equals $20,000 net capital gain. Half of this net capital gain is your CDA balance. $20,000 times 50% equals $10,000. So now you can pay out $10,000 as a capital dividend. Before you can pay out this capital dividend, you have to let the Canada Revenue Agency, or the CRA, know what you're up to. This involves filing a Capital Dividend Election Form T2054. This form needs to be completed and submitted before you pay the dividend to avoid any nasty penalties. Make sure your payment date is after you filed these forms. It's usually a good idea to wait until the CRA processes your form to confirm your CDA balance. Timing is everything. It's best to wait for CRA approval before paying out the dividend to avoid any penalties if there's a discrepancy. If you decide to pay the dividend before getting CRA approval and there's a disagreement about your CDA balance, you might face penalties. Right now, the CRA can take several months to process CDA election form requests, so plan ahead. The CDA balance is cumulative and doesn't expire. However, remember that the desired payment date must be after the filing date to avoid penalties. By following these steps, you can make the most of your CDA and enjoy the benefits of a tax-free dividend. If you need any help with preparing and filing the CDA election request forms, just provide your accountant with the details of your investment sales and confirm any other capital gains or losses since your last fiscal year end. Understanding and managing your CDA properly can offer significant tax benefits. Just make sure you stick to the proper procedures to maximize these benefits and stay on the CRA's good side. If you have any more questions or need further clarification, feel free to reach out. We're here to help. All right, that does it for Capital Dividend Accounts in under 5 minutes. If you're looking for more ways to reduce your taxes, check out our featured video where I run down the top ways to save tax as a Canadian. And if you found this video helpful, please hit that like button. And for more content like this, consider subscribing and hitting the bell icon to get notified when new videos drop. Thanks for watching, and we'll see you in the next video. Cheers.